Hello, I'm Rick Kirschbrown. Early in my career, I was a stockbroker, but I often didn't sleep well at night, tossing and turning in my bed, worrying about the volatility and safety of my clients' investments, and disgusted with the Wolf of Wall Street-like tactics promoted by my brokerage house. I finally quit when I just couldn't take it anymore. Years later, I accidentally stumbled upon commercial real estate investing, and over the next 10 plus years, I built a nice personal portfolio. My trophy property was a 136-unit, $8 million apartment complex located in Houston, Texas. But unfortunately, like many others, I lost everything in the real estate crash. However, once the market turned around, having learned hard lessons from my mistakes, I started over again. And while rebuilding my own personal portfolio, I decided to get a real estate license so that I could help others safely build legacy wealth for their families too. Today, I own a company that aggregates funds from small groups of investors for the purpose of making shrewd commercial real estate investments. I'm excited to report that my clients and I are on target to make massive profits in 2016 and beyond. What I have observed after working with so many diverse clients is that the goal of most investors is to retire comfortably and to create legacy wealth for their families. However, the majority of them just don't seem to trust the stock market for the long term. The stock market can be uncertain, frequently leaving investors feeling that they have little control over their money. Individual stocks can often be affected by market conditions that have nothing to do with the stock itself, and mutual funds also seem to basically follow the market. As confirmed by Bloomberg and other financial publications, many apprehensive investors are now moving to real estate. The headline from a Bloomberg.com article in February of 2014 reported that millionaires see real estate as the top investment for 2014. Bloomberg explained that wealthy investors see stocks getting expensive and interest rates staying stable or even declining over the next couple of years. And Bloomberg also quotes a survey conducted by the Wealth Management Department of a major investment bank. They learned that more than 77% of investors with at least $1 million in assets own commercial real estate, and 1/3 of the millionaires surveyed said they plan to buy more real estate within the year. Commercial real estate rarely experiences the crazy volatility of the stock market. Any changes in value, either up or down, happen gradually over time. You have total control of your investments and can improve them at any time in order to increase their value. Other distinct advantages of real estate include increasing equity as the loan is paid down, natural appreciation, and tremendous tax advantages. And the monthly cash flow from a well-maintained commercial property can provide you and your heirs with multiple lifetimes of safe and predictable income. Visionquest Acquisitions pools investors' money for the purpose of making smart commercial real estate investments. We fix the problems, hold until the property is stabilized, sell for a substantial gain, and share the profits with you. Our done-for-you business model is designed for investors that don't have enough cash to do a large commercial deal on their own, simply aren't interested in assuming the responsibilities of direct ownership for a sizable commercial property, or want to skip the learning curve and avoid making costly mistakes. We offer our investors the ability to participate in a wide range of commercial real estate transactions. Visionquest Acquisitions focuses primarily on what's known as value-add investments. These types of properties usually already have cash flow, but our goal is to increase that cash flow over time by making improvements or repositioning the property. For example, value-add properties may not be operating at their total potential because they're not fully leased, are leased at below market rents, have not been properly maintained, or are poorly managed. Value adds generate high financial returns due to their substantial appreciation. Always on the alert for value add investment opportunities, Dayton Valley Car Wash is our latest gem in the rough. Originally built in the early 1990s, this car wash had been shut down for many years. The current owner acquired the property in 2015, totally refurbishing it with all new state-of-the-art environmentally green equipment before reopening the facility in January of 2016. This busy Highway 50 location is premium, with an excellent traffic count in excess of 20,000 vehicles per day. Dayton Valley Car Wash simply cannot be missed and is clearly visible from either direction. The car wash has 1 automatic and 3 individual self-service bays. Additional equipment includes 3 vacuum stations, a coin-op car care, products vending machine, and multiple security cameras with 24/7 internet access. Dayton Valley Car Wash is a constant cash cow with gross monthly revenues in excess of $20,000 for each of the last 2 months. Sales have grown consistently since reopening. The owner has done exceptionally well, turning an old dormant idea into a new thriving business. And now for him, it's time to sell. In contrast to Visionquest's more conservative strategy, the owner's business model is to roll his profits as quickly as possible into another startup venture. Dayton Valley Car Wash fully meets our commercial real estate investment criteria. It already has substantial cash flow, but it is not yet operating at full potential. For example, this property reached its current sales volume without any marketing or promotions. Additionally, we've identified several inexpensive improvements that will also increase revenues. Anyone who owns a motorized vehicle that drives on asphalt, dirt, water, or snow is a potential car wash customer. In fact, more than 2 out of every 3 car and truck owners take their vehicles to a car wash, and the International Car Wash Association has the stats to back that up. And did you know that washing a vehicle in your own driveway is now prohibited in many municipalities and by some homeowners associations? The International Car Wash Association created a car wash site evaluation tool. Here's how Dayton Valley Car Wash sizes up against much of their relevant criteria. Competition within a 3-mile radius. Squeakies in Carson City, 9.8 miles away. Target traffic greater than 20,000. We have more than 20,000 vehicles passing by each day. Slower traffic speeds. There's a stoplight on Highway 50 within 1 block. Site frontage and sign visibility. This car wash stands out. It cannot be missed. Operating hours, 24/7, 365. Easy ingress, egress. Super easy in and out from Highway 50. Proximity to shopping district, 3 minutes from Smith Shopping Center. Positive population trend, 75.3% increase since 2000. In full disclosure, the Sinclair convenience store gas station just a few hundred yards to the north does have 1 outdated automatic bay that has not been maintained. Their bay is not readily visible, it's frequently out of order, and does a very inadequate job of washing vehicles. The purchase price of the subject property is $1 million. The sellers agreed to hold a note for $250,000, leaving a balance of $750,000. To cover all costs, our investors will be contributing $800,000. The balance of the purchase price is $750,000. Closing costs, inspections, legal fees, our sponsor acquisition fee, and a fund for operating expenses. I've been asked how we determine the price and if we're getting a fair deal. The industry standard for valuing a self-service car wash is derived by using a multiplier of 3 to 5 times the annual gross sales. The annualized gross based on the last 2 months of operations is $240,000. Utilizing the industry norm, this car wash is worth between $720,000 and $1.2 million. The property had been listed at $1.2 million. However, after negotiations with the seller, we agreed upon a purchase price of $1 million. $1 million divided by $240,000 is approximately 4.1 times the annual gross sales. We believe this is a fair price because gross sales have been increasing monthly and the car wash is not yet anywhere near full potential. While we do have 6 full months of financials, it's our opinion that the last 60 days of operations more accurately reflect the current state of the business. Annualizing the expenses, extrapolating the income, and including the financial obligations of the acquisition, here's a summarized quick pro forma. Income includes gross sales, plus a small amount of additional revenue from the lease of the on-site detail shop. Expenses include operations, payment on the seller's note, interest only to the investors during the holding period, and property management fees. Total income less expenses is approximately $42,163. Investors are slated to make money in 3 ways: monthly interest payments at 6% annual on their initial investment, monthly disbursements of their prorated share of the monthly net income, and their prorated share of the net profits after the car wash is sold in 3 years. The investors' projected annual return, not including profits from the sale of the car wash after the 3-year holding period, range from 8.6 to 13.3%. If we were to do nothing more than stabilize the annual gross sales at $240,000, the investor's projected annual return would roughly be 8.6%. However, if we increase annual gross sales to our target of $375,000, the investor's projected annual return should be about 13.3%. Projected annual returns, including the profits from the sale of the car wash, range from 12.8 to 21.4. And if we do nothing more than stabilize the annual gross sales at $240,000, the investor's projected annual return should be approximately 12.8% per year. But if we increase annual gross sales to our $375,000 target, the investor's projected annual return would jump to just about 21.4% per year. Bottom line, we believe that by the end of 3 years, an average return of 13% to 20% per year is very realistic. This video is for general informational purposes only and is not intended to constitute an offer to sell or buy any securities. Any offer or solicitation will only be made through a private placement memorandum and other related documentation and will be subject to the terms and conditions contained in such documents. We are selling ownership in a group through what might be deemed a security, thus there are restrictions. Please contact us regarding the qualifications necessary to become an investor. To avoid wasting anyone's time, be advised that only 16 investment units will be offered at $50,000 apiece. We reserve the right to offer a limited number of half units at $25,000. This is Rick Kirschbrown from Visionquest Acquisitions, and thanks for watching our video. Please reach out to us here.